All right, so what's up, traders? Super excited for today's video. We're looking at TMF. This is the 20-year Treasury bullish 3x ETF. Very risky, highly leveraged. So I don't recommend these for beginners, but in fact, this actually was a viewer request that I missed about a week or two ago. So just dropping this video to go ahead and give you guys a request update and follow through with those viewer requests that I do every single week. So if you want to see your ticker symbol in the next video, all you have to do is comment down below what I've been tracking. Okay, and this basically is the more highly leveraged version of TLT. And to my instinct, things are tracking pretty much very similarly, right? What we have here is actually an ABC movement to the downside. We have a 1, 2, 3 wave pattern down. We hit our 1.0 extension. I'm going to explain all of these strategies, and then we're going to go forward and progress into TLT, HYG, which is the high yield corporate bond ETF. And then we're going to look at TNX and a couple other things as well that I really use to measure the market and gauge how sentiment is going in the market. But what I want to go over is that it's no secret we've been in a bear market and everything has been in a strong downtrend. So you really need to start utilizing the three major retracement levels. Now, this is using the fib tool over here. So specifically, you want to pay attention to the 61.8, the 50%, and the 38.2. These are the three most common and most respected retracement levels you're ever going to find. And then you want to start using the MACD, right? So we'll actually make the MACD just a little bit bigger here, so that you guys can see some of the things that I'm talking about. All right. And we also use the Fibonacci extension. So if you click over here and you go to your different tools, you go to trend-based fib extension, this is going to give you those 1.0 targets, right? So if you're using Elliott wave theory, the way it works is you're going to get your C wave target based off of your A to B correction, right? So we go over here and we take the the fib tool, right? And specifically we're going to be using this one, the fib trend-based fib extension. And from there, what you do is you take your your A wave, you connect it down to your B wave high, and that's going to give you the C wave targets down here. So that's how I got these targets. If we zoom in some more, okay, we can actually see that we did get those targets and we actually hit those targets and found some support. So, I missed the video update about a week or two ago when they initially asked for the request, and I'm just going through the comments trying to catch up on everything. And, they may have called this bounce. Now, initially, I really think that this was in the bounce period when I was saying that, hey, now is a good time to start being cautious because I think we could get a downward move. We were waiting on the MACD sell signal. So if we look at the MACD sell signal, what that's going to be is when this red line here crosses below the white line. If you take a look in the history, we can see every time this red line crosses below the white line, that ultimately ends up in a very sharp move to the downside. All right. Now this works for many other things, but if you look at TMF specifically, this works very, very well. All right. We can see, another MACD sell signal right here, and then we see a very sharp move to the downside. If we zoom back out into the past a little bit more, up here, we see another MACD sell signal, and then we get a very sharp move to the downside, right? Here's the MACD sell signal at this point in time, and then ultimately we get a sharp drop to the downside. And we can keep doing this and keep doing this and go back in time and look, MACD sell signal right around this area, we get a sharp drop to the downside. So MACD is something you very want to pay attention to, especially on the daily chart. It is most effective on the daily chart. I also like looking at it on the weekly chart. But those are pretty much the only charts that I'm paying attention to on the MACD, and it's very good for giving you entry and exit signals. So, combining a couple strategies together, right? We got our ABC move to the downside. We hit our 1.0 extension of the AB wave, right? And your C wave is going to be the 1.0 extension. We hit there, we found a little bit of support and we bounced up. But what we did was we got it rejected at our three major retracement levels, right? So I spoke about this in the beginning, and, nothing is going to move in a straight line up or a straight line down. You're going to get a sharp move to the downside. And in this case, obviously we're in a downtrend. We get a healthy retracement back up to right in between our 38.2 and 50% retracement level, right? As you can see, we top out right here, okay? And that's a completely healthy retracement. So it's not signifying a reversal. If we would have broke through these levels right here, then we could have looked for a reversal to the upside. But in fact, we came up, got a healthy retracement, and continued that downtrend, hit our C wave target. So if we zoom in on the price action right now, if you're looking at TMF, the price levels you really want to pay attention to are going to be right here, okay? You have about 6.41. That's your major support level. That's your C wave bottom right here, right? You really need to pay attention to that level. And then you need to look at these three levels up here. We've already got rejected perfectly at our 50% retracement level, and we got a MACD sell signal, which indicates bearishness, right? So, if you're watching this in real time and you're looking at this, before this video come out and you're using these strategies, what you're seeing is, hey, we got to bounce off of our C wave target, right? We had the ABC move down. We hit our C wave and we've gotten a slight bounce, and it's a perfectly healthy retracement exactly up to our 50% retracement level at 10.36. Now, after we hit our 10.36 50% retracement level, we got a MACD sell signal right here, and we got a sharp move to the downside. So there's a very high likelihood that we're coming down to retest these lows. Now, that doesn't mean it has to go in a straight line. We could bounce up and perhaps retest some of these levels before dropping back down. But, you really want to keep the overall perspective in mind. Okay. So that's basically it. That's my update for TMF. Is you really want to pay attention to 938, and you really want to pay attention to 645. Okay, those are your two main levels that you're really looking out for. Everything in between there is mostly going to be noise, right? You can speculate and you can scalp and you can day trade in between these levels, but if we break through our level down here, most likely we're going to head to the downside. And if we find some support and we rally up, there's a very strong rejection level at 938, 1036, and 1134. Ultimately, until we break out from those levels and start a possible reversal, right? And keep in mind, a reversal means we're going to make a high and then a higher high. So, if you're looking at upside potential, you're really looking at a lot of potential if you're very bullish on this, right? For this to have a reversal, it would have to go up over 96%. That's extremely bullish. Now, keep in mind, it's a 3x bullish ETF. So that would result in about like a 30% move in something like TLT, okay? So to me, I don't really see that happening. I think interest rates are going to continue going up higher, as in the last previous video I did on the market update. I gave basically my whole thesis and showed you guys a lot of the charts and data why I think TLT and interest rates will continue to go higher, which results in the prices of these bonds and these treasuries going lower. Now, the next thing we're going to look at is TLT. We'll jump straight into TLT, okay? Give you guys the juice and give you guys the sauce. We're tracking a 5-wave Elliott move to the downside, and we're using some of the same strategies, right? We're using our major retracement levels. These have been very valid rejection levels. We'll get into those in just a second. But if you see, we have a 1, 2, 3, 4, 5 wave down, bringing TLT to about 80, anywhere into 90, okay? This is ultimately my price target that I'm looking at for TLT in some time of 2023, as I believe rates will go higher. Your wave 1, your wave 3, and your wave 5 are going to be what's known as impulsive waves to the downside. These are 1, 2, 3, 4, 5 waves. Those are impulsive waves. And then after that completion, you get a correction wave, right? And these are ABC corrections. And if we zoom in just a little bit more, we can see that this has been playing out very nicely throughout the year, and, really respecting these levels, okay? If we take a look, right, we got our 1, 2, 3, 4, 5 down, and then we got a nice ABC correction wave up. We got rejected here at our 50% retracement level, which is a major retracement level for continuing the downtrend. And we continue that downtrend with a 1, 2, 3, 4, 5 wave down. After we complete those 5 waves down, we get an ABC wave up. And we completed our ABC wave up exactly at our 61.8% retracement level, okay? So right here, we got the 61.8, rejection. And I was really just telling people to be patient, right? There's no reason to rush into a trade right here, because there was a possibility we could have gapped up, right, and come up here to fill this gap right here. Or there's a possibility we could break our major support level at 106. So, you really want to wait for the real signals before entering in these trades, So that way you're not trading in no man's land, right? Eventually we did get the MACD sell signal, right? The red line crosses below the white line. That happens right over here. We break through our major support level 106.33, and we've had a very significant drop to the downside. Now, I do think that there is still a good chance for us to get some type of bounce, but overall, I'm very bearish, right? The reason I think we could see a bounce is we have this trend line here we've been respecting many times, right? One, two, three, four times we've bounced off of this trend line and got a rejection to the downside. We've actually broken through this trend line and we're coming back down and retesting it, right? So it could look like this, a breakout, retest, and move forward, or we're going to get a look above and fail, which is going to be very bearish, right? So a look above and fail is when we zoom back in, what it's going to look like is this, okay? Essentially, we're going to look above this trend line, right? And so we, got a rejection here. We pulled back. We finally got the breakthrough. We looked up above, and it looks like we're either getting a retest to move higher, as I said, or we're getting a look above and fail. So if we get a look above and fail and start trading below this trend line, there's a high likelihood we're going to come down and fill this gap in between these two candlesticks right here. Again, gaps on the daily chart, they fill about 90% of the time. The big question is when, right? So we have plenty of gaps up. That's going to most likely fill when interest rates start to drop, right? When interest rates start to drop, then you're going to see yields when yields and interest rates start to drop, you're going to see the prices of bonds and treasuries start to go up, right? So, I know that there's plenty of gaps up, but to me, these are going to fill when we start to get some bullish news on treasuries and bonds, right? Meaning that like, hey, interest rates are actually about to start dropping. When that starts to happen, that's most likely when a lot of these gaps are going to start to fill and when we could possibly get an uptrend. But for right now, one of the main reasons that I think we could get some type of bounce is it looks very possible we completed our wave one down, right? So it would make perfect technical analysis sense for us to eventually get some type of wave two up, ultimately to complete wave three down and continue heading down in this 5-wave pattern, taking TLT down to about 80 or 90. The MACD looks very bearish. Okay, there's nothing indicating that we're about to get a strong rally. So I'm not interested in taking really any trades right now, right? I called the dead cat bounce on this day right here. I said, hey, we're most likely going to bounce off this trend line. And we got a very nice move the next day up, and we made a lot of money in the Discord. So if you want to join our private trading group, get access to all of our real-time market updates and everything that we're getting in and out of as we get in and out of them, plus the valuable data and intel sources, make sure to join the Discord with the link in the description below. But other than that, you can watch these videos, these free videos that I'm putting out. And so that's what I'm watching for right now. I'm watching to see, are we going to get a breakout retest and try to continue higher? Or are we going to get a breakout and look below, right? Look above and fail, essentially, right? Everything is lining up with wave one being complete. Now, we don't know how extended this wave one is going to be, right? We could eventually come down and fill this gap before we get our wave one and then get a wave two bounce. And that would really extend the 5-wave move to the downside much lower. But for right now, a lot of things are aligning that we're going to get some type of bounce in the market, and it really wouldn't surprise me, right? So, be patient over the next week or two. Let the setups come to you. You don't really want to force any trades. There's no reason to force any trades. Everything has been following the TA very well. And so right now we're going to see, is it going to follow the patterns, right? Is this the end of wave one? Are we going to get some type of bounce up here to wave two? Or are we going to extend this wave one further down below and have to reevaluate how the 5-wave structure to the downside is going to play out? The next thing we're going to look at is going to be HYG. This is high yield corporate bonds. This has been playing out very well. If you've been staying up to date with the channel, we've been looking, for a couple patterns. Remember how I mentioned a look above and fail? So this is a great example of a look above and fail. We were tracking this bullish pattern known as a falling wedge, indicated by these two trend lines, price action zigzagging in between. We got a breakout, but it was a look above and fail, and this is very bearish once you break the trend line back down. Now, on top of that look above and fail, we also had a rising wedge pattern combined with the MACD sell signal. So the rising wedge is going to be the exact opposite of that bullish falling wedge.
it's going to be a bearish pattern. And once we break this trend line to the bottom, we can expect to see a sharp move to the downside. We can see that we've gotten that, and we've tested our 61.8 retracement level at 78.2, which is a very good and strong area of support, right? So the way it works is like, you would see a continuation to the upside if you hold this retracement level at 72.82. As soon as we break the 72.82% level, that's when we can see the reversal. So it's a really key area in my mind that we're at right here on HYG. And if, compared to TLT, we're seeing other bonds start to rally a little bit more, right? And we're starting to see prices go up a little bit. So, TLT may be lagging a little bit and HYG may be a leading indicator, or this thing could be wrong, right? And there could be a divergence and we could see the market continue to head lower. But ultimately, things have been following the overall analysis very well, right? We saw this rising wedge. We got to look above and fail, which is something that we're currently paying attention to see if we're going to get on TLT. If we get that, that's going to be very bearish, as it was very bearish here. As soon as we traded below that trend line, we got a sharp move to the downside. And we had that rising wedge combined with the MACD sell signal right here at this date, and another sharp move to the downside. If we take a look at tips, right, which this is the Treasury and inflation protected. And this thing is on sale right now. I believe this is one of the most worst performances it has had in history, right? If not the worst. Okay. And you can just go ahead and look that up and confirm for yourself. But this thing has already completed our 5-wave move to the downside, which is what we're looking at ultimately for on TLT. We had wave 1, 2, 3, 4, 5, completed this 5-wave pattern, and we were looking for a possible breakout or a possible breakdown. What we got here was another textbook look above and fail, right? So we have this bear flag setting up, right? We have this curved trend line to the downside. We have our consolidation period right here. So this is the flag pole. This is the flag itself. We got to look above, and then we failed, right? We broke back through this trend line. This is bearish, right? And this is indicating that most likely we're going to come back down and retest these lows on the TIPS ETF. So you need to pay close attention to that and pay close attention to if we get that look above and fail on TLT. Another one we're going to look at real quick is going to be TNX. Okay. And this is the 10-year treasury yield. And we can see that this thing has been rising very, very much. Now we're at a very interesting period. Okay. Because I basically predicted that, hey, two things were going to happen. Okay. We were either going to get, find support and get an ABC wave up, right? And here's our A, here's our B, and then here's our C. It looks like that could be playing out, but also, okay, we're right here at the top of my 3-wave move to the downside as well. So it's going to be really, really interesting. I'm going to be paying a lot of attention to TNX right now because we do have our A wave completion right here at the 50% retracement level. We got a very strong bounce to the upside, completing our B wave possibly. Okay. And if we find resistance up here and this starts to drop back down, there's a strong possibility TNX could come back down to fill this gap down here right around 2.89. Now, that's not guaranteed, right? Overall, it looks very, very bullish, right? When you look at the overall structure and we zoom out a little bit more, this thing is definitely in a strong uptrend, right? So most likely, these rates are going to go higher and stay higher for longer than people are expecting. And this will affect the stock market. For instance, if we take a look at SPY, the S&P 500 ETF, we're also tracking a very similar 5-wave move to the downside as we were on TLT, along with a major trend line up here. Okay, so, here's our major trend line right here that we keep getting multiple rejections at. We got rejected here. We got to look above and fail, very bearish, and we started to come back down. And we're really looking at this 1, 2, 3, 4, 5-wave pattern that could take the S&P 500 down to about 330 to about 350 is really some of my bearish price targets on the S&P 500 using our main indicator, the MACD sell signal, which has not failed us at all this year. As soon as we got the MACD sell signal right around here, we had a very big drop. We dropped down to 379.15, and we've been holding this level very, very well, right? It's really, really interesting, and which makes me think that the S&P 500 could possibly have completed its wave 1 down. Remember, we were tracking 5-wave move to the downside for our fifth and final wave. We had our ABC correction wave up right around here, around this trend line. We had a look above and fail right here, and we've had bearish activity since then. And we're really just holding our 50% retracement level of support at 379.15. If we break below this level, most likely we're going to come down and test 371.85, and that's when we can reevaluate, because eventually you are going to need some type of bounce, right? Nothing's going to move in a straight line up. Nothing's going to move in a straight line down. It's going to have a move down, retrace, continue that downtrend, or it's going to have a move up, retrace, continue the uptrend. So what we're looking for here is we're looking to see, did we complete our wave one down? And instead of hitting our 61.8 retracement level, in fact, we actually hit the 50%. Possibly this could be the end of the wave one, and we get some type of bounce up for a wave two. I know a lot of people are actually very bullish when you look at a lot of the data. We're setting up for a lot of short squeezes in the stock market. So it's a very high potential that, hey, maybe if we break this little trend line right here, we could potentially get a move up on the S&P 500 to about 396. Some of the other things that I really like to look at to gauge is going to be the VIX. Okay, obviously this is the volatility index, and the way the VIX works and the way it's traded, pretty much the entire year or two, the past year or two, in all of 2022, is it's very one directional for 1 month, 2 months at a time. So if we look here, we see we're bearish, bearish, bearish for 1 or 2 months. We get a breakout and a sharp pullback, and then a continuation upwards. So it does trade in another direction, in an upwards direction, for another month or two, but it always gets a breakout and a sharp pullback. And then ultimately we see it trades down for another month or two. We get a breakout, sharp pullback, and then a continuation, and it's trading up for a month or two. Then we come over here and we look, and it's really just been continuing and continuing that pattern, right? Over here, we can see again, just trading one direction, breakout, pullback, and then trading one direction upwards to the upside. Here we're trading downwards, 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 get the breakout, pullback, and possibly we could be heading upwards on VIX. So that's one thing that I'm paying attention a lot to, is going to be the VIX right now. Another really good thing to look at is the skew. Okay, and the skew measures, what this does is, instead of measuring just the way the VIX works, right, is it measures option contracts, call and put option contracts on the S&P 500. Skew is going to be measuring out of the money protection, right? So it's a little bit more extreme. Over here, we had a really big spike, and over here, we had a really big spike. And the following trading day, we saw the market was down heavily. So, anytime you see big spikes in the skew index, most likely that's indicating some type of short-term drop, and that's indicating that people are hedging their portfolios at a really aggressive rate, right? If the S&P 500 is trading at 380 and people are buying 380 puts or 385 puts, those are a little bit safer puts than versus buying 350 puts, 340 puts, 330 puts. Those are out of the money, right? Because the S&P 500 is not trading at those low levels yet, and people are betting that it's going to trade at those levels. So whenever you see a spike in the skew index, most likely you're going to see some type of drop in the stock market. Another thing I really like to look at is SPY G, okay, versus SPY V. And what this does is this measures the growth sector versus the value sector. The growth sector is obviously very, very bullish. So in a bull market, right, and pretty much the S&P and the stock market is in a bull market most of the time, what you're going to see is you're going to see growth outperforming value. And that's exactly what we're seeing here, right? On a historical basis, we're seeing growth outperforming value, and growth stocks are gaining at a higher pace than value stocks. But this right here is the entire year of 2022. When we zoom in a little bit more, we can see we're definitely in a bearish pattern right here. And we have this clear bearish channel indicated by the trend lines on the top and the bottom. We're really just zigzagging in between here. Now, one thing to note is that we are above the 50% of, the halfway point of this bearish channel. So we are leaning a little bit more towards bullish. And we do also have this bullish pattern as the falling wedge right here. We're zigzagging in between these patterns. We're going to look and pay close attention. Are we going to come up and get some type of breakout and potentially try to fill these gaps up? Or is this thing going to zigzag and get tight in between this price action and ultimately get a breakout to the downside? So again, this kind of just measures whether growth or value is outperforming, and this kind of lets you know whether you're in a bull market or a bear market. Another really good one to use is XLU. All right, so we'll type that in real quick, XLU/XBI. What this is utility sectors versus biotech sectors. So utilities are one of the most risk off assets, okay? And biotech is arguably one of the most risk on assets. So when you see this thing going up, it's basically letting you know that, hey, utilities are outperforming biotech. And what that means is that the market is more risk off versus risk on as you see this continue to grow up, right? And what we did was we actually got a breakout, retest, and a continuation upwards. So, right now the market is still risk off, right? And as soon as we see this start to really decline and break either this support level here or this support level here, that's potentially when we could see some type of bear market rally in the S&P 500 and in the stock market as a general. We did see this kind of peak out up here, right? And it's starting to fall back down. If this continues downward, this is going to mean the market is more risk on, and you could see plays like, the ARK ETF, right? And a lot of the stocks in Kathy Wood's ARK ETF, those could potentially start rallying, like plays like Tesla, right? Plays like Amazon. Other high growth stocks really could outperform whenever this thing is going down. So that's something you want to pay attention to. That's something that really helps to gauge market sentiment. And that's one of the main things that I really like to look at. So hopefully you enjoyed this video. Don't forget, at the end of the day, this video was a viewer request update, and I just included a bunch of other tickers in here. But if you want to see a specific video on your ticker symbol, all you have to do is comment down below, and I'll be happy to drop a video on it for you guys anytime I can, as soon as I can, as I try to do, viewer request every single week. And I upload about 5 to 15 times a week as well. So, trying to stay consistent, trying to drop frequently, and, you can look forward to seeing some consistent video uploads from me.